Once I share my screen and go into presentation mode, I pretty much can't see you folks anymore. Come on, baby. There you go. And so if you need me, you'll probably need to talk over me because I will not be able to see you. But my thought is I'm going to go through my presentation and I will definitely pause for questions, and we'll let you, if you have any questions, we'll get them, hopefully get them answered, or you'll end up getting my standard answer of the IRS has not released guidance on that. So we'll see. But anyway, so as I was saying, I always have to put this disclaimer up just to let you know that right now the information that I'm giving you this morning is current as of January 31st. So we've been getting guidance, we've been getting information as it rolls out. We have been attempting to get the word out, but so this is kind of my cutoff date of information that is reflected in this presentation. So just so you know that. And then, okay, so let's talk a little bit about what happened here at the end of 2020. So at the end of 2020, the Consolidated Appropriations Act was issued by Congress. That was right at the end of the year, 12/27/2020. And generally what that did is it authorized the second round of PPP. It expanded the prior PPP, and it also gave us some, it also allowed other entities to qualify for PPP. So we're going to talk a little bit about what that, essentially what that act did. And then I also gave you some other links that are here. There were, we call them IFRs, these interim final rules. The SBA, that Small Business Administration, has been issuing some more clarity that will discuss the changes to PPP, gives you more information about the second draw loan. These things are 85, one of them's 113 pages long. These are basically the documents that I kind of summarized here in this presentation. But just in case you're having trouble sleeping or you really want to be confused, I would say definitely these are some great links and you can get some good information from there for sure. And these links are live. I will make sure I get a PDF to Leah so she can post that. But these links, I checked them all. They do work. So you can link to the actual websites that give you all of that information. So as I mentioned earlier, we're going to talk, when we were just kind of chatting, let's talk about some of the tax matters before I get into the specifics of the PPP. So one of the items that we had really been waiting for guidance on was about the taxability of the PPP proceeds, because there was still quite a bit of questions about, oh my gosh, are we now going to be taxed on this money that we get, these loan proceeds? And what about the expenses that we use the money to pay, and what's going to happen to those? And so we did get clarity from the IRS. That's one thing we actually do know, is that if the loan is forgiven, that is not considered income when you file your tax return. So that was really good news. Also, the expenses that you paid for using the PPP funds are still fully deductible. So that was really a win-win for taxpayers, because not only do you not have to pay taxes on that debt forgiveness, any part of the PPP loan that's truly forgiven, you can still deduct all the expenses that you had during the year. So again, that was a really positive outcome for taxpayers. Now we'll enter our friend California. For all of us California businesses, California said, hey, We're good with the loan forgiveness not being part of income. So California will not tax you on that loan forgiveness. However, they have made it clear that any expenses that were paid for using PPP proceeds are not deductible. So that means your business is going to have a different net income, California versus federal. And this is why I said earlier, our motto for the year, hopefully you all remember it, extend is your friend, because this is one of the areas that we really are still waiting for some additional, maybe changes. Just last week, I started to hear about rumblings of maybe California deciding to get on board with allowing expenses to be deducted. But again, it's kind of like in rumor stage right now and nothing has happened. And if you filed your tax return today and you put that in, expenses that you paid for using PPP funds would not be deductible for California. So that's why our motto is extend as your friend. There's no harm in waiting to see whether this is going to turn around and maybe we'll have an additional positive impact for you later. They also gave us some clarity that things like those other CARES Act aid that's out there, like the EIDL loans, any of the SBA loan payment subsidies and things are also excluded from gross income. So those were some other items that they clarified. So those are, I mean, most of this good news. So let's talk a little bit about PPP. I tend to be a visual person, so I kind of did a little side by side thing going on here. And really we have PPP 1 and PPP 2. And really they expanded the use of PPP 1 and they authorized PPP2. We talked about that. And they changed a little bit of the eligibility requirements. I have a slide a little later. We'll talk a little bit more about that. But they decreased the amount of, or the limit of employees that you could have. But they also added a revenue, you had to show a revenue reduction. So now with PPP2, you're going to have to show that you had a 25% decrease in revenue as opposed to the original PPP one draw where you did not have to show a decrease. And then, so again, we'll talk a little bit in the next slide about the expanded entity types that are now eligible. And they also expanded your ability to get some forgiveness. So they added some different types of expenses that can be used to qualify for forgiveness. So that was also a positive result. Generally, the whole this whole legislation was pretty positive. I think it certainly was taxpayer beneficial, but certainly very complex still. Okay, so let's talk a little bit more in detail about the expansion of the original PPP. So really the way it works is if you have never had a PPP loan, then even though you are applying now in 2021, you're actually applying to get a first tier or a PPP 1 loan. And so you would qualify under those qualifications. And that really is important for our new borrowers. So new eligible borrowers here include housing cooperatives, some of these online media organizations, and certainly near and dear to our chamber's heart, 501c6s are now included in the authorized borrowers for PPP. And the only thing they did there is they gave those 501c6 organizations, and those organizations, by the way, are generally member organizations, a lot of unions and entities, not just Chamber of Commerce's, but just generally they are entities that have members. Especially the union, like labor union entities, they tend to do a lot of lobbying, and that's one of the limitations that that PPP does have is you can't be spending more than 15% of your revenues on lobbying. So there's a little bit of some limitations that are there, but generally, I think it makes it very favorable for 501c6 organizations to be able to qualify. Let's see. Okay, so here's some of the changes that were changed for forgiveness, for loan forgiveness. So the existing loan over there on the left side of your screen, those are still there. They're still in place. We're talking about, of course, your payroll costs, your health benefits. What we did get was some clarity as to what health benefits really are qualifying. Retirement, mortgage, rent, those types of things, and those are eligible forgiveness both under PPP1 and PPP2, so both. What they've added now are they've expanded the group healthcare benefits, and they have also added some items for like operations, worker protection expenditures. So when you buy that PPE, that personal protective equipment for your workers, or any kind of, let's say, modification that you need to make to your working location, if you need to install those barriers or all the hand sanitizers and those types of things, those are all eligible expenses now for forgiveness. Also, I thought one of the interesting things under that supplier costs, those are for entities that, let's say at the time of shutdown, they had contracts sitting out there saying to their suppliers saying, hey, I'm going to buy all these items from you, and you really couldn't cancel them. So those types of expenses, things that you were kind of on the hook for as an entity, you may be able to also put in this bucket and include in your cost for forgiveness. So they tried to make it so there were some any kind of expenses that you would need to adjust for our new COVID world would be included and eligible for forgiveness. We got also some more good news about simplified forgiveness. So they really started to, I guess I'll say, stratify these loans by amount. And so there's a couple different stratifications that I would say. So there is loans that are less than 150,000. So those smaller loans, those are eligible for a streamlined forgiveness process. So there's a new form. It actually just came out, I would say almost the end of January. So it's brand new, just out. And it will basically allow you to include your employee retention information, the amount that you spent on payroll, the total loan, and essentially ask you to attest to the fact that you complied with all of the PPP terms and conditions. And then you will not be required to submit all of the backup documentation when you apply for forgiveness. So it makes it easier, quicker. Now, does that mean you shouldn't have all the documentation? Of course not, because you could be asked for it at some point as you are going through the approval process. But at least on submission of request for forgiveness, you do not need to supply all that. But you should have it, as always, because of course they're going to make you check a box that says under penalty of perjury, you qualify for all, for this forgiveness, and you really did this and you really spent it as you were supposed to. And then always we remind everyone about record retention. You make sure you keep those documents. Generally, it says for, the requirement is 4 years. I usually just tell all of my clients, keep things for 5 years. And then you're covered. So So yeah, so definitely make sure you have that documentation. But the good news is if you have a smaller loan, you should be able to get through the loan forgiveness process quicker. Okay, so let's talk finally about the second draw loans. So what they did with PPP2 is they just changed some of the qualification. So to get the second draw loans, your business needed to be in operation at least by February 15th, 2020. And they lowered the threshold of number of employees. So it used to be under the old plan, under PPP1, you would have 500 employees or less and you could qualify. Well, this one is 300 employees or less. So they made it a lower number. If you received a PPP loan previously, so you already received a first round PPP loan, you need to have fully utilized your original loan to qualify for PPP2. So if you got a loan and you did not use it all and you returned some, you will not qualify for PPP2. And as far as we know right now, that there's no wiggle room on that. Just if you used it, then you would qualify, you'd be eligible to apply under PPP2, but if you did not, you're just not. There's some restriction on Chinese ownership and control. And then one of the other new items that PPP2 is requiring is for you to document that you have had a 25% or greater decrease in gross receipts. And you can do that year over year. It can be a quarterly. You can select which quarter to use. This is some of the guidance that has been released in those IFRs that I mentioned earlier about how to calculate that. So the SBA has released some of that information. We don't have time to go into it in detail here, but it's typically year over year and a quarterly comparison between 2020, 2021, and 2019 is typically the base year. And then important for any of our entities that are part of affiliated groups. So if you have subsidiaries or a common owner that owns several different, the affiliate rules here are very complicated. And they could throw you out of compliance or eligibility if let's say as a group, as an affiliate group, you have not had that 25% or greater decrease, even if your individual business has, you won't qualify because of the affiliated rules. So the good news is they waived those for those NAICS 72 entities. Those are your restaurants, your hospitality entities. And so they have loosened up those requirements for those businesses, our hardest hit businesses because of this pandemic. So they've made those a little bit easier. And again, as I talked about simplified loan forgiveness, there's also simplified, I said some simplified applications. Also for those loans that are smaller, 150,000 or less, and those same streamline abilities for the loan forgiveness for PPP2 are also in place for our loans that are under 150,000. So again, I keep pounding on, hey, you still may be required to provide that documentation. So make sure if you get a first round loan or a second round loan that you are keeping that documentation on how you spent those funds. Let's see, loan sizing. So they also did a little tweak to the loan sizing to, again, try to help those restaurants and hospitality based businesses. So we still are generally at the lesser of 2.5 times the average monthly payroll. The original PPP loan is capped at 10 million. The second round, because it was certainly less authorized, is capped at 2 million. So that's a change, but they made the loan sizing a little more, again, a little more beneficial for our restaurants and hospitality and entities. So they get the lesser of 3.5 times average monthly payroll, still capped at that 2 million. And again, this is another item that is clarified and more in detail in those IFRs that I linked to earlier, that talks about exactly how to calculate that average monthly payroll. Okay, so I guess I wanted to talk a little bit, and this was not in our title, I wanted to talk a little bit about the employee retention credit. And the reason I wanted to talk about that is because this Consolidated Appropriations Act, one of the items that it did is it allowed interplay between the PPP loan and the employee retention credit. Because initially when because both of these were part of the CARES Act, right? The PPP and this employee retention credit. Well, it used to be that if you got the PPP, you were ineligible to claim that employee retention credit. Well, the Consolidated Appropriations Act changed that. And now they've said, oh no, even if you get a PPP, you could still qualify for this credit. And it's retroactive to wages paid back to March 12th, 2020. So I wanted to bring it up because in case any of you may qualify still, you could go back, file, you claim it on your 941s. That's your employee payroll tax form. And you go back and you would file amended 941s to claim the credit. And so I just wanted to at least bring it up. They also extended it. It used to be that it was going to be, this program was going to be done at December 31st, 2020. They extended it to the first 2 quarters of 2021. So we have all the way through June 30th, 2021 to take advantage of this. And so, as I mentioned, there now is an interplay with PPP. So you can still potentially qualify for this. The key is, as we'll talk about a little bit more, is there is no double dipping. So if you got a PPP loan and you used it to pay for whatever wages you paid for with the PPP loan, those cannot qualify you also for the employee retention credit. So it's either or. But depending on how many employees you have and how much of the PPP loan you actually got, this still could get you some credit. But that's the important thing, no double dipping. Some of the eligibility requirements, you either need to have been closed due to a valid government order, and it really does need to be something like when the California said, your business must be closed. So it needs to be a valid government order, not just a health, like an advisory. It has to be an actual shutdown order, or you have to meet the gross receipts test, which in 2020, you had to have a 50% decline quarter over quarter. And now the effective 1/1/21, you only have to show a 20% decline. So they also made it a little easier to qualify here in 2021. They made the credit a little bigger. Prior credit you would get 50% of your qualified wages, that and including health benefits, that could be the potential credit. That was capped at $5,000 an employee. Or now, as of 1/1/2021, that's a 70%. You could get up to 70%, capped at $7,000 per employee. And now it used to be 5,000 was annual. For 2021, you could get $7,000 for that same employee each quarter. So up to $14,000 per employee. Oh, what's happening in my tax software? Sorry. Oh, friends. There we go. So you can get it really for 2021, they really made it so you could get much more than you could 2020. Although if you qualify and you can go back and get it now for 2020, I would still recommend that you do that. I think I just gave you also a bunch of different resources, places where you can go to get information. There's a lot, so many FAQs on both the Treasury website and the SBA website. They do update them very regularly. So we really get information almost weekly on that, on some of those. And then of course, I had to put our website up there because we literally have an entire COVID-19 page that has everything from resources, articles, links to all of these other websites. So you can get to it. It's free to access whether you're a client or not. And then of course, the Chamber of Commerce the U.S. Chamber of Commerce has some great resources also. And that link is there for you also. And I think that's it. I've probably taken, hopefully not too much time, but I believe that is it for me. My contact information is here, so feel free to reach out if you have any other questions. It's just a lot of these calculations, as you can tell, are pretty complex. And so, certainly if you are having questions and you want to see if you will be eligible for any of these credits, I would certainly suggest that you reach out, if not to me, your current accountant, to really make sure that you qualify, because they, I said, they're complicated. So I guess now should we ask for questions or?
Yes. So I saw the 60% payroll retention for loan forgiveness. So that's a year over year. If my payroll is 60% of what it was last year, I could have the total PPP forgiven.
No, 60% is what you need to spend the proceeds on. You need to spend payroll. At least 60% of it on payroll.
Okay, so if my payroll has gone down, that will reduce my
loan forgiveness, correct. Okay. And there's another hairy calculation that goes with that, that's FTEs year over year. They'll allow you a little bit of a decrease, but generally it is a proportionate forgiveness depending on how many employees you retain.
Does anybody else have any questions?
Was clear as mud, right?
I thought it was amazing, and thank you so much, Miss Tina.
You are welcome.